Okay, doke. Raoul, thank you very much for taking the time to speak with me today.
Not at all. Good fun.
I
Looking
have
forward
to
to it.
say, it actually very much is an honor to get the chance to speak with you. You've had a tremendous amount of experience in this industry, and we've only got an hour, and I'm sure we could fill up three or four. And there's so much to talk about, especially now, in the last couple days. Um, I just did want to say thank you. I thought that my introduction to you was via the Stefan Livera podcast recently. And then when I was prepping for this podcast, I realized that I'd come across a number of your videos, both with you in them and Real Vision's videos many times before. I just hadn't put the two together.
Right.
So I'm a huge fan of what you're doing at Real Vision. I mean, the content is so quality, and the access to the people that you get, you have amazing interviews and stuff like that. So kudos to you on that work. I'm sure we'll break into it a little bit as we go along. But
Thanks
thank
a
you
lot.
for
I
coming
really
on.
appreciate it.
So because you have such a depth and breadth of experience, and you're kind of playing in so many different fields, traditional finance, new media, Bitcoin and crypto, it's kind of hard to determine where to start with something like this. But I think where I want to start is just what's super relevant right now. I was going to ask you what's kind of top of mind, most interesting thing going on in your world right now, but you had that amazing Twitter thread yesterday where you just kind of you provided evidence for kind of the emergence of your thesis that you've been talking about for the last, let's say, 3 to 5 years, if not longer, and you showed a lot of that evidence. So why don't we just crack right into that and what the hell is going on, and where we are.
Yeah, I mean, this is a very big question, and it's going to take a bit of a long answer.
Sure,
So I
sure.
apologize for all of that. Um, so my job is to look at the world's most complex, beautiful jigsaw puzzle, which is the global economy. So as a macro investor, I look at all asset classes around the world, every single country, region, and I look at the interrelationships between those, economic data and economic growth, and looking for the major trends and the big opportunities that lie ahead. So my thesis for a long time had been that we had been in the latter stages of a debt supercycle. So why do I say stuff like that? Well, generally, all of these things are cyclical. The world builds up too much debt, and then after a while, it kind of expunges the debt, and you have some debt clearance events, or it can just take a very long time, like it's been taking in Japan. So the world had built up an extraordinary amount of debt, never seen before amounts of debt. So then 2001 came along, and the first part of that started getting a bit shaky. So there was a lot of equity, people investing in equities, too much speculation. People started pulling out of that, and some of the more indebted companies went bust, and a few frauds happened. But what everyone was expecting was the big debt unwind didn't happen. It doubled up. It doubled up as the Fed cut rates and all the central banks around the world cut rates even lower. And what happened there was that everybody took the opportunity to add to their debt. So governments added to their debts. Households bought houses in record numbers. They borrowed on their credit cards. They borrowed in every way they could. And then the corporations borrowed. So at the end of 2008, the next rolling part of this debt unwind started. And this is the big one, was the financial and the household debt, really, followed by the banks, because the banks are a direct consequence of the household debt. So that blew up big time. And then we start again. And the next debt build-up is the corporate debt market. So the corporate debt market wasn't really affected by 2008, and they've doubled again since then. So it just doesn't stop because interest rates are low, and there's an optic that low interest rates are, you must borrow, you must borrow. It doesn't happen in other countries so much anymore, but we've seen that across the world. So this rolling kind of debt unwind is something I've been looking at. As rates get lower and lower and lower, weird things happen. So when the Federal Reserve raised rates last year, they almost broke the system, and rates barely went up. And everyone's like, well, that can't be. It's because there's so much debt that it's the rate of change of the rate of increase in rates that matters the most. So if your mortgage on your house goes from 1% to 3%, it's gone up 600%. People don't realize that. So that makes a massive difference to your expenditure because you'll have adjusted your lifestyle or you'd have borrowed more money depending on the affordability. So suddenly you can't afford things. So I started noticing, so that's the big flagging that, I've been looking for this event, knowing that the business cycle is the key determinant of these kind of outcomes. So in a booming business cycle, you're looking to invest in emerging markets, you're looking to invest in risky things, and that's all well and good. But then the business cycle rolled over in 2015. The oil price halved and almost halved again. And everyone's like, whoa, what happened there? And the dollar had gone up. And that was interesting. The world almost came to a halt, but the US just avoided a recession, and some of the world was in a recession, some wasn't. And that was driven by the dollar. So that's a really interesting thing. Why the dollar? Because in that borrowing boom we've had, the dollar has been the currency that everybody's borrowed. So the rest of the world's borrowed $13 trillion. Trillion with a T is an extraordinary amount of money. The biggest position the world has ever known is the short dollar trade that is basically the borrowing of US dollars. So once the dollar starts going up and interest rates in the US start going up and the US growth was stronger than anywhere else, guess what? Money started piling in the US and the dollar started going up. So that kind of broke the world in 2015-16. The Chinese stimulated, everything was all right for a while. And then the Fed started raising rates, and then the dollar started creeping back up again, and then the world blew up. And the world blew up not in equity market terms, although we saw December, November last year got really hairy. What really is the bond market snapped. It went, no, this is not going to happen. The yield curve flattened, interest rates collapsed as they said, you're going to go into recession. And we saw recessionary patterns in spending, world trade, and everything else. And then the final icing on the cake was that Donald Trump decided that trade tariffs were a good idea. And maybe they are, maybe they aren't, but they're not a good idea if you want to keep world trade going, because it does two things. One, it lowers world trade anyway. Okay, so that means that everybody's GDP gets hit. But secondly, if world trade is mainly conducted in US dollars and the US is the larger buyer of foreign goods, well, it means there's less dollars in the system because there's less buying from the US. So guess what? There's a shortage of dollars, so the dollar goes up. Cut to a few days ago, the Fed meeting. The Fed kind of know some of this situation. They know that the global economy is weak. The global PMI is now below 50, meaning the global economy is pretty close to contraction. It's certainly at zero growth right now. The US is slowing fast as well. So what did the Fed do? They only cut 25 basis points, which wasn't enough, because what happened was the dollar exploded higher again. That policy error resulted in the Chinese currency breaking its key levels. It resulted in currencies all around the world starting to break their key levels. And we're starting to see the snowballing knock-on effects as things start to shift of the US monetary policy being too tight for the rest of the world, too many borrowings in dollars, the dollar being forced higher, nobody being able to stop it, and this loop of events that will end up leading to probably the big unwind in corporate bonds. Now, why corporate bonds are important is twofold. So, sorry, I told you it was a big story here.
It's okay.
The corporate bond thing is twofold. Why it's important is, why are there so many corporate bonds? What are companies borrowing for? It's not like they're building factories. They're borrowing money, really simply, because in America, there's a tax loophole. And the tax loophole is it's better to have debt than equity. So they just buy back their equity and issue debt. So they force their share price higher whilst giving themselves stock options as a management team, pat themselves on the back that the share price has gone higher, rape the company, get rich. So that's what they're doing. But we know that they sell them to the pension system. And we've got a record number of pensioners hitting America right now as the baby boomers turn to retirement. Now, they didn't save enough money. Wall Street promised that their pensions would be enough. They're not. So these guys are taking a lot of risk into their final years because they're desperately trying to get to their number, the number that they have in their head to retire on, or to fulfill the black hole that these pension funds have. So they've been buying these corporate bonds. So as more and more bonds get issued, the credit gets downgraded. And they're now all triple B, which is one notch above junk bonds. There's 4 trillion of these sitting there. Makes it a trillion of them held by 5 companies: General Electric, General Motors, Ford, Dell, and AT&T. So it's all very precarious because if they get downgraded to junk, the thing goes illiquid. So who are the buyers of those is the pension system. And the pension system it's interesting because places like Illinois, they were bankrupt. The pension system didn't have enough money to pay for the teachers and firemen and all of those people. So they raised taxes and they put the tax receipts to buy back into the pension. And those tax receipts bought those corporate bonds. So what you've got is the only buyer of corporate bonds in the world is basically the pension system, and the only buyer of equities left in the world is the corporate buybacks. So they're all correlated. Both of those things are correlated to the business cycle. When the business cycle goes weak, and I think the US is going into recession, then what you find that corporate buybacks stop because companies are earning less money, so they can't afford to pay back the debt. So they stop. So that's the buyer of equities leaving the building. Now, the problem is the tax receipts that buy the corporate bonds are also completely correlated to GDP growth, because obviously people pay more taxes when the economy is going well. So then the largest buyer of corporate bonds is about to leave the building as well. Then you've got a big fucking mess. So that's where we are, and we're kind of coming into the point. And for me, it's always to do with the bottom of the business cycle. That's when things get ugly, because when growth is there, things are okay. When growth starts dying away, you start to find all of these big problems lurking beneath the surface.
Yeah. And so, I mean, listening to you speak, I mean, I love what you're saying, and it's really interesting to be speaking with someone that kind of has a fairly 10,000-foot view of the spider web of how all this interconnects, right? Because it's very easy to oversimplify how these things work, either on the positive or the negative. And I'm probably guilty of that in the past on the negative. I just kind of looked out and said, the government can't print that much money, and a couple other key things are going to go to hell. But that really influences the timeline on which you might be correct. That's still probably true, but it may be true in a 20, 30-year period, whereas if you have the detailed kind of analysis that you just described and that you've made a career of, then you're probably going to have a little bit of a more refined target on the timeline of this kind of stuff.
So, okay, let's talk about time, and you're dead right. So, my job is, we all know it's all a bit screwed.
Yeah.
But as you say, we've known it's been screwed since 1999, but it's still been kind of morphing around of one bubble after another, and we're uncomfortable with it. We understand there's something wrong. We don't know what's happening. This is the rise of Bitcoin comes out of this, and I'm sure we'll come on to all of this later.
Yeah.
But there's a lot of stuff that's happening, and we all know it's wrong. And the Occupy Wall Street, the 1%, the whole thing is all part of the same thing, is the over-financialization of the world. And it's made us very uncomfortable because we kind of know that we're the collateral damage that's going to occur in this, whether it's the saver, whether it's somebody in a job, whatever it may be. We kind of feel it intrinsically. So let's talk about the end game. Excuse me. Why I'm particularly interested right now is because when you look at the central banks and where they are in their cycles, the US, and everyone's like, the US dollar is going to collapse. Well, the US is the least indebted in terms of percentage of the main three economies. It has the least central bank assets as a percentage of GDP. It actually has interest rates. The others are negative. So the US is by far the golden child. Why would you ever short the US dollar? In fact, you just want all your assets in US dollars.
Right.
So what you've actually got, so let's look at Europe and Japan and China.
Yeah.
So China is screwed with a capital F. It's like they have so much debt, they've overextended, they have no ability to raise capital, and the issue is they need dollar funding desperately. So they're out of the game. There's almost nothing they can do right now, which is why they're starting to weaken their currency. But the end game also is their population is now getting older faster than any other country in the world. So that lowers the rate of GDP growth and productivity generally within a nation. So they've got a big problem on their hands. But Japan is where my interest really lies, because Japan has the oldest population. China will overtake it soon. But they've got an older population, and they were just hoping that they can manage this situation. So in that quiet Japanese way of managing their situation, their central bank ended up buying 70% of all the government debt, and then half the stock market. I mean, it is unprecedented in all economic history. But the Japanese have got away with it. Nothing went wrong. So why not logically conclude that in the next recession, they'll go to 100% of the debt?
Mm-hmm.
Because this MMT movement you're hearing about is debt doesn't matter if it's in your own currency. That's the basic premise.
Right.
Okay, so the logical conclusion is if the central bank fund all of the debt, then everything we ever learned in finance doesn't mean anything. And therefore, they can just write off the debt, which is what a debt jubilee is. And you'll hear this term coming up more and more.
Mm-hmm.
So the debt jubilee is the central bank government say, oh, forget about it. You don't need to pay any of it back. So what happens to the currency? My guess is the currency absolutely collapses.
Right.
So Japan is really the next recession away, call it this recession away, because they're about to go into recession, from ending the game. The Europeans are also about the same. I mean, they bought almost all the German government bonds in existence. There's very few bonds available in Europe, but they're going to keep going because they have to. And they're going to cut rates again because it's all they can do. In the end, they're just driving their banking system into bankruptcy, as are the Japanese. So all of their banks are on the edge of a cliff. They look like they're about to go into the meltdown mode as we start going into the end game. Now, what's interesting is
this is what you tweeted about, some of what you tweeted about yesterday in that thread.
Yeah, and last week I had another big tweet about all of this
I want
stuff.
to direct everybody to your Twitter feed and those threads in particular because they really were great. So I wanted to get that in, but go on.
So if the banks go, well, what are these central banks going to do? They're going to have to cut rates further, which drives the bank prices down further, and they're going to have to bail out the banks, which means increasing their balance sheets again, which means buying yet more of the government debt. So in the end, we're getting towards the end game. I think it's happening in this cycle. I may be wrong. It could be the next one. So the likelihood is that Japan and China kick it off with eventually weaken their currencies massively as the market starts figuring out that they're going to have to try and write off their debts in some sort of debt default hidden between the central bank and the government. Mm-hmm. People are going to start pricing that into Europe and then pricing it into the US, and we'll have that moment where everyone says, holy shit, we're in trouble, of which I think that everything ends up having to get renegotiated. And whether we write off debts, and this is why I'm kind of interested in Bitcoin and a new economic system,
right,
because I just don't see how we can get out of this.
Yeah, so that's quite a lot to take on. But to be honest with you, and the nuances and the particular examples and some of the ways that it might play out in what you just articulated is unique. But I've spent time. I've interviewed people like Jim Rogers, Mark Faber, and people like that, and they've been saying more or less the same thing for the last 20 years. And that's why my comment kind of like the timing issue is really, that's where the nuance is really necessary. And that's where looking at the entire web of things is probably the most rewarding or beneficial because it maybe gives you a better sense of timing. Anybody can look at the macro and say, well, how the fuck is this going to be sustainable long term? But you don't know exactly when. And the kind of the frustrating thing and the thing that kind of messes with your mind is that it's amazing how long it's been able to persist that we're up till this point, that these strategies have been able to persist, even though objectively you look at them and you think this is madness. And even if you looked at 2008, go ahead.
And that creates a terrible behavioral bias within all of us, right? Because we know the deep-seated truth, which is we shouldn't be involved in stock markets, bond markets, a number of things.
Right.
Because we just go straight to the end game. Everything's going to blow up.
Right.
Well, the problem is there's a 20-year cycle of rolling blow-ups, rolling bubbles. And, we're talking about a debt super cycle that came from basically 1950s onwards. Mm-hmm. So this is a big thing. It doesn't finish overnight, but we extrapolate too fast. So that stops people actually investing.
Right.
So a bunch of them just went, oh, it's gold, buy gold. Forget everything else. Hide in the hills with a gun. Buy gold.
I got to be honest.
Yes, gold.
That's what I did in 2006, 7, 8. I just said, I don't have the mind to really play the complexity of it. I'm just going to go with the macro bet, which was gold, and we all know how that played out over the last 10 years.
Yeah, and so gold works well and then doesn't work well because it's not a pure bet. Now, how I got round it is I looked at countries that didn't have the same issues. So ones with young demographics, low debts, that kind of thing. And you end up with the countries like India,
Hmm.
Singapore. You end up with well, Singapore's a bit older population, but it's within that belt. It could even be Indonesia. It could be mainly in countries around the Indian Ocean. A lot of the Middle Eastern countries,
Yeah.
countries like Morocco. There's a whole bunch of these where there's huge investment opportunities, and they have completely the opposite setup.
Hmm.
So the world has opportunities, and the other opportunity for me was always bonds. Bonds, the bond market's not going to blow up until you get to the end. So you might as well ride that tiger all the way because, bond yields are going negative around the world.
Right.
And that's not going to stop. It can't. So
So
yeah, a lot of people got paralyzed and got stuck with gold and gold only, and they sound like bitter people, and they are right, but they were too early and they just jumped to catastrophe straight away, and that's not how it works.
yeah. So that being said, are we now at the juncture where the end game, as you called it, that's kind of what your Twitter thread was all about yesterday, is kind of indicating all these precipices that we were on the edge of. Are we at that stage now? And the question I always ask to people that have that kind of opinion is, it's real easy to say that this is the end of a debt cycle within a debt cycle, or cycle within a cycle within a cycle, or maybe there's the collapse of the system, the collapse of the currency, whatever it may be. But what does that actually mean? What happens when a
Okay.
major currency collapses, when major economies suffer in the manner that's being described in these conversations?
Well, so the why now is because we're about to go into recession. So my probability of a recession is extremely high. Could I be wrong? Of course.
Yeah.
But I would give it about a 70 to 80% chance of a global recession, including the US. So in recessions, bad things happen. So your probability of the end game spikes every time you start heading into a recession.
Mm-hmm.
So that's why I'm focusing right now. Because if GDP growth at 3.5% and you're in the early to mid stages of a cycle, you don't worry about these kind of things. You worry about them late cycle, and this is the longest cycle in all recorded history, particularly in the US.
Right.
Okay, so what goes wrong when it does happen? Well, it's difficult to know. So we've had two examples that I'll bring to this. One was the complete wipeout situation, which was Cyprus. In 2012, I was in Spain when Europe almost ground to a halt. I mean, it was unbelievable. The banks were turning people's deposits into preference shares and then going bust, writing off people's money. There was a near collapse of the entire banking system. In Spain, where I was, the ECB forced Spain to take $30 billion. That's nothing for the country the size of Spain. They forced them to take $30 billion to stop the banks going under. I had to buy a bloody generator at the house because I was worried that we were going to lose electricity.
Mm-hmm.
I had to take cash out of the bank, and I'm not that kind of guy. I'm not the prepper.
Right.
I was, it was like, oh my God, this is going to happen, and it came really within a week of it. So at that time, Cyprus was allowed to default because the Europeans went, shit, if we have to underwrite all of this, Europe's gone. So what we're going to do is we're going to write a law that says we're going to bail in the bank creditors. So if you've got your deposits and they're over $100,000, because 100,000 is secured by the ECB, 100,000 euros, they're going to take your money away, and they're going to pay it to the debtors. Okay, that sounds fine. The rich people get stiff, but that's not how it worked. Think if you own a gas station, right? You have a massive amount of cash in your bank account because you have razor thin margins on all the gasoline. So you've always got, call it $1 million in your bank account, but your profits may be 20 grand. But what happens is they took all the cash, all the businesses, insurance companies. I mean, everybody got killed. People who were buying houses, they got their cash ready to pay for mortgages, all taken. So it wiped out a system, and the cash machine stopped working. There was no way of getting money. The ECB plus the UK had to airlift in cash, physical cash, to keep the economy going. So that's the worst case scenario. It was a catastrophic event. The stock market fell 99%. People got absolutely screwed, and it's still recovering. The other side of the equation is the 1930s, where we had a similar setup, and we had a rolling bust, which 1929 was part of it, but then one economy after the other left the gold standard, so they basically devalued their currency. With the final shoe to drop was in 1932, I think it was, or 33, is the US finally decided to leave the gold standard because the US dollar was too strong versus everybody else. And that's kind of what I think is going to happen. Now, the odd thing about that situation is obviously we went into war.
Right.
And I'm not suggesting that that is necessarily the case. But what happened is those economies did eventually get out of it, but it took them from 1933 to probably 1953. That was 20 years. We're already at 20 years lost, 30 years lost in Japan.
Yeah.
And we're 20 years lost in Europe right now. So it's not unfeasible that that's the kind of event that we have. So I think maybe somewhere between the two, somewhere between Cyprus in the 1930s, which is, look, it is a bad event. People are going to get hurt, particularly the retirees. If you're in your 30s, great. Finally, you can afford to buy some assets at some reasonable valuation, like stocks or even property.
Yeah.
But if you're 65 years old, baby boomer, and you've pretty much got your retirement pool sorted out, you're in big trouble unless you take some action.
So maybe that leads in to Bitcoin here, but do you think that the magnitude of, should this come to pass, the magnitude of this unwinding, will that inspire or will people demand, or will it just cause a change in the system, or will it just be kind of a minor restructuring of it, but not a complete replacement of something new with something new?
The answer is who the hell knows. Also, who knows whether the central banks figure yet another way of extending it and massaging it and keeping everything together. Look, that's a possible outcome, and it's a reasonable probability as well.
Yeah.
But the genie is out of the bottle because people are saying even if they do that, it's not going to stop the development of call it the alternative financial infrastructure. I mean, the extreme amount of intelligence and work and man hours that's going into Bitcoin, cryptocurrencies, blockchain technologies, and digitization of assets and tokenization of assets is almost unparalleled at this point. It was unparalleled. That's hyperbolic. It was probably, yeah. I mean, it's huge.
Yeah.
I mean, it's sucking in everybody. So that process either gets accelerated or it continues, depending on the outcomes. But the outcome is that white paper from Nakamoto back when it came out was so mind-blowingly clever in its complication but simplicity of idea that only now are we starting to understand how big the concept potentially is.
Yeah.
That potentially it is, as somebody called it on Real Vision, they called it the security truth machine. It's like he called it an operating system for humanity.
Yeah.
Which sounds very ridiculous, but basically it's a storage of all global assets in a different way, and a new accountability and a new means of transaction and a new means of value, and it is almost too big to get your head around, and that came out of that one white paper.
Yeah.
Extraordinary.
It's, going down the Bitcoin rabbit hole, at first you think it's one thing, and then it ends up, going down all these different tunnels, and and sometimes you get maybe overly philosophical about it, and it's not quite, at least yet, that thing, but it really is amazing how many different things it seems to have the capability, the possibility to influence.
And that's the thing, is it is nothing yet apart from an appreciating digital asset.
Right.
Okay. It's what is giving it the appreciation is because it has so much optionality on so many potential outcomes of the future. Because as we know, there is literally 30, 40, 50 different applications at top level, not the micro applications of, trade finance or whatever. We're talking the big level of changes to the financial system, maybe 30 of these damn things.
Yeah.
So if that's the case, how do you price that option? You've got an option on top of an option on top of an option on top of an option. It is extremely valuable because it's kind of like the ultimate VC portfolio. You're going to have several hundred baggers within that, but your VC portfolio is going up in the meantime to try and price all of these opportunities.
Yeah. And I've always, just on that point, I've always found it one of the many compelling things about Bitcoin, and possibly it's in, as in an investment scenario, is just, you accumulate the coin and you're benefiting from all those people you mentioned earlier who are incredibly intelligent and motivated and working on building out many different aspects and functionality of this network, actualizing a lot of that potential. I mean, you benefit from that simply from owning a
Well,
piece of the network, holding some
Well,
of the coin.
but this is the beauty of this bloody thing, is it plays perfectly for behavioral economics. So as the value increases, it brings more people into the sphere to build more and more stuff, because what you're basically getting is access to free money. So you're giving your work, your intellectual capacity, and in exchange, you're getting something of value, which is this digital asset.
Yeah.
So as it goes up, it encourages more people to do cool things with it, which forces the price up further. And so it is a really unique reward system. And the mining system is so clever.
Yeah.
But even the mining is rewarded, but everybody's rewarded in the ecosystem. So it becomes like a vortex that sucks everybody in. And I'm seeing all of my macro guys get sucked into this vortex as they understand that the gravitational pull to this is extraordinary, because the closer you are to the creation of money, the richer you will become.
Yeah. Now let's talk about that for a second, because I know you come from that world, and so it'd be interesting to get your perspective. But as lots of Bitcoiners, especially if they've been in for a while, they're used to, having their point of view on what Bitcoin is, the potential role that it could play in the future, be dismissed over the years by the legacy guys. Like it's internet money, it's magic money, it's not backed by anything. We've all heard that stuff when we've brought it up at a dinner or something like that, right? And I know now, I know more and more people are coming into it, and I've listened to a lot of the interviews and discussions that you've had with people, and what it seems to be the case is that everybody on an individual basis who's in the industry is involved, but they haven't gotten to the point yet where they can get their clients involved through their fund or what have you. That's coming, but there's a lag time on that. Are there still people that you interact with at kind of the level that you're at, have been in the industry for a long time, that still kind of don't see it? Or has it gone past the point where you can dismiss it outright and you actually have to kind of look into it now because it's gotten so much momentum behind it?
The last chance to dismiss Bitcoin was at the bubble high at 20,000. And I got out in that rally. I'd been in for quite a long time before that. I got out and it was like, okay, let's now see whether all of that forking, all of the kind of weird changes that nobody understood, does this mean anything or not? So Bitcoin plummets as it does. And then out of the ashes rises the phoenix once more. And it's like, okay, this is now too robust to have any opinion. So I think that brought in the last people. They're like, okay, because macro guys, you might be able to knock something down once, twice like that. But after a while, it's kind of like the Amazon share price, or Microsoft share price back in the 80s. Yeah, sure, you could see it fall 80% or so. But then once it starts to recover, that something is being priced in that you're not seeing.
Yeah.
A macro guy's job is look at price action and figure out, okay, what is it I don't know?
Right.
And that's why it sucked everybody in. So you're right. I don't know a single person that doesn't really believe in this now.
Yeah.
But to different levels of understanding.
Right.
Because it is very complex. So people like to anchor it on what they know. Digital gold is the easiest for many, but that is, I think, probably entirely the wrong description. But who knows and who cares?
Well, I'll get your description on it in a moment, but do you think that the emergence of Bitcoin and then kind of its persistence, as you mentioned, boom and bust, and then people having to recognize that it's real and it's here to stay, but when they make that realization and they decide, okay, I got to learn about it, whether you're a professional hedge fund manager or you're Joe on the street, in your education process of understanding what Bitcoin is and knowing that it's special, because that's what you're hearing about it, and you're trying to find the thing within it that's special, there's an education process that is kind of like a mirror to the existing legacy system, let's say. So basically what I'm getting at is, to what degree do you think that people learning about Bitcoin as a result of it just being around for the last 10 years and everybody talking about it, has enhanced their education about the different attributes and elements of the legacy system, and in majority its faults. So let's say the fiat currency system and other aspects of it, the debt and things like that. How much do you think that has influenced what we're seeing currently in the legacy system, and which you described in your Twitter thread the other day? Like, how much is Bitcoin acting as a mirror to actually put pressure on the legacy system?
I don't think it's putting pressure on the legacy system. I think it's happening in its own right.
Okay.
What is interesting is the education of people about central banking. People now talk about fiat currency all the time.
And never used to be the case, right?
No, nobody understood it. And it was, in 2008, there was many of us like, you don't understand what is going on here. But people figured out they got screwed somehow, so I might as well figure out how I got screwed.
Right.
Okay, that was good. So that's why suddenly it was like, okay, is there an alternative? And Bitcoin came exactly at the right time. It's kind of magically, mysteriously out of nowhere.
It's got a lot of magic components, yeah.
Yeah, so I think people understand it, but as Bitcoin has this wrong understanding by many, the financial markets has a wrong understanding by many, because everybody just chose it's all fucked, I need to get out. This is just simply not the case. It is a probabilistic outcome that takes time to play out. And there is a number of ways that it is wrong to walk out of the financial system, but it's right to create a parallel financial system at the same time, because then you have a smooth transition. You just do not want a difficult transition.
Yeah.
What you'd love to do is Bitcoin, cryptocurrency, blockchain, digitalization just seamlessly merge and overpower the existing financial system. You don't want to turn the lights off on one and turn the lights on the other. That doesn't work. That is war.
That's a lot more disruptive, yeah.
Way too much.
So regarding, you were saying that a lot of people that are starting to look at Bitcoin in your industry, let's say, fund managers, et cetera, and you say that most of their understanding is kind of the most simple one to get value from it. So it's digital gold, and I get that, and it's got a cap, so it's a scarce asset, and
yeah. Or the other thing is, I get blockchain. It's an interesting technology. We can use it for a bunch of stuff like securities lending or custody.
Right.
So they grab hold of one or the other, and we've all done it when we get into it as something to understand.
Right. And as with with Bitcoin and with everything, our depth of understanding of it, and as a result, our conviction or lack thereof in it, is determined by our understanding of it. If you just think it's digital gold, then you'll have a certain amount of conviction to put a certain percentage of, let's say, your funds under management into it. If you think it's digital gold and it's new form of governance and it's an option on blah, 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 all the things that it may be in the future, then that may dictate a different approach. So on the people that you are familiar with and in your industry, how are they making, either personal or if it is in their professional purview already, how are they making allocations based on their understanding? How aggressive is it? How, what's their time frame on it? All of those sort of details about how they're getting into it.
I think they are personally more aggressive than you'd expect. Macro guys look for opportunity. So my world is the macro world.
Yeah.
These guys look for opportunity. They look for, where is the macro story? They understand there's a macro story behind Bitcoin. They understand the changes. They understand the global macro, the issues within the global economy. So those guys have a pretty high percentage, because don't forget, one of their brethren, in fact, several of their brethren have gone on to make fortunes. Whether we're talking Dan Morehead, ex-Tiger Management, one of the most famous hedge funds in the world. Dan was a very famous hedge fund guy. He then sets up Pantera. Mike Novogratz, super famous hedge fund guy. Everybody knows Mike. Novo goes and sets up Galaxy. John Burbank, super famous hedge fund guy. He goes and sets up Passport Digital business. Pete Brigger, another ex-Goldman guy, ex-Fortress guy, used to work with Novo. Fortress, massive digital guys. So one after the other of the kind of great and the good of the industry are in it. And they're not only, so look what they do. They first buy it themselves. They understand where it's going because they've spent some time, because they're macro guys. They do their homework. And then they have the holy shit moment and they build a business around it.
Right.
They're all doing it.
Yeah.
So, and Dan Tapiero, who was just on Real Vision a couple of weeks ago.
I saw that interview.
Dan,
Yeah.
another macro guy, Stan Druckenmiller, Michael Steinhardt, Tiger, all of these guys worked with all the greats. He's gone over to the dark. He owns a gold business as well.
Yeah.
And he's now starting to heavily invest in Bitcoin.
And when do you think they will be allocating client funds rather than just personally getting involved? I mean, obviously with Galaxy and stuff like that, they're launching funds and...
Yeah, so they're just finding vehicles and the ways to do it. So it's happening. So many of the hedge funds I know have allocations to crypto.
Right.
So I think, whether they're using the Bitcoin Investment Trust or whether they're using others, the new futures contract will come soon. That will help people invest in it, make it a lot easier for people.
Yeah.
So it's coming and it's happening every day. So it's growing. And I know there's a weird thing that goes on in the crypto community because most people have not come from finance. Mm-hmm. So they're hugely insecure about what do the finance people think. Can you validate this? Validate it. They hate the finance world, but they want validation from the finance world. It's kind of a weird thing. But What I'm saying is it's not going to be a one-day validation. It is the slow adoption of this from everybody. It's a vortex, and it's that gravitational pull is sucking everybody in. The battle was won. It's like we talk about this with. I talk about this a lot with people who are environmental activists. I'm like, the battle was won 2 decades ago when we started. Every washing machine, every fridge, every car, everything changed its electricity consumption. It's now woven into the fabric of our lives. That yes, there's many things that still need to be done.
It's just a matter of time.
It's just a matter of time. The battle was won. And yes, you'll have some acceleration points and deceleration points in the battle, but the battle was won, and the battle in Bitcoin has been won.
And so what do you think of people in professional, whether they're fund managers or in finance, a finance professional in some capacity who still dismisses outright?
It's not my problem.
Right.
So that, in the end, I lie. Real Vision has done a lot of this from day one. Since we launched in 2014, we have educated and featured the great and the good from the Bitcoin, crypto, blockchain industry, and purposely have driven that message forward. When we brought this content, people were like, what the hell is this shit? We're not interested.
Right.
Over time, people grow because I understand its importance to the future. Yeah. So yes, I take time to make that important within Real Vision, and it is becoming a larger part of people's financial lives.
Right.
So I do that on a personal level. I'm not the Bitcoin evangelist because it is too difficult to explain to people, which is one of the problems with Bitcoin. But it doesn't matter.
Right.
It's not your house. You don't need to show it off to your mates and go, look at my house. Isn't it amazing? Aren't I rich? It's your own thing. It's like gold. Just do what you want with it, and it doesn't matter. You don't need to convert everybody. It'll happen.
Right. It's funny you say that because anyone who's passionate about this stuff gets into these conversations, right? They're stimulating, they're exciting. We all like having them, whether it's looking at the macro view and shifting over to Bitcoin or whatever it is. And I've had several of them, and it's either the person is very interested and attentive and wants to know more about this thing that they just hadn't had the time to devote to figuring out more, or they're really kind of stuck in the mud on the other side of the fence and unwilling to kind of cede any ground. And I don't like, I don't care about anybody's opinion enough to get into like a heated discussion or an argument to represent this side of things. And it's part of the reason why I started doing interviews in Bitcoin in 2015 and now being more focused with this show is because. And what you said you're doing with Real Vision is kind of what sparked this in me, is because you're just kind of letting people who are involved in this, interested in this, working with this, tell their story, talk about it, why it's of interest to them, what they think it is, and then let that information just flow out into the ether. And what it does, it does. And like you said, the vortex is going to keep spinning anyway. So this is just a little massaging, for anybody whose antenna
that's right.
is up.
And people can accept, and that's the beauty of Real Vision. We don't really have an agenda apart from you need to know more about this. I don't care whether you like Bitcoin or hate Bitcoin. Yeah. But the point being, it's not going away. So understand it. Understand a little bit. Just even if you hear the first 3 minutes of an interview and turn it off, next time you might listen to 5 minutes. And then after a while, you'll have your own coherent arguments on why you don't like it.
Yeah.
And then maybe you start to see oh, that guy I respect, and he's got an idea. And you might broaden your horizon. Again, my job is not to convert people to Bitcoin enthusiasts. It's for them to understand the changes in the financial world around them and to make their own minds up what they want to do.
Right.
They might say, actually, for me, my best opportunity is investing in Saudi Arabian equities. Go knock your socks off. Do whatever you want to do according to your risk tolerance and what is your investment framework. All we're trying to do is just give people that information. As you say, just put it out in the ether. And we do it with everything. Real Vision is not this doom and gloom platform that sometimes we get accused of. It just happens to be on a lot of people's minds.
Right.
And truth in finance was the core DNA of what we believed in.
Right.
So truth in finance means I need to have your opinion, and I don't care whether I like it or not.
Yeah.
That's not my issue. The world is too full of people being offended by other people's opinions.
Absolutely.
What we want to do, and we're not, again, we're not there to attract kind of the crazy free speech of I can insult anybody anytime. No, this is high discourse, respect for people's opinions, and let's have a discourse.
Yeah, I love that, and I think that's why the content has been so high quality, from production to the content of the guests and the interviews. It's all been really, really great. I want to ask you one more question before we move on. But so obviously the hearings in Congress recently about Libra and morphed into Bitcoin and cryptocurrencies generally introduced to probably the public lexicon, at least in the political circles or people who follow, the term shitcoin. And so I bring this up because the Bitcoin community is very passionate about this issue, that it's a Bitcoin only world and everything else is maybe a valiant and altruistic effort in sometimes, although there's been a lot of fraud and bullshit in the ICO boom in 2017 and all that kind of stuff. But basically that Bitcoin is sound money. That's the most important change that we need. Everything else is putting the cart before the horse, and Bitcoin will probably be able to do it itself later on when things are built on top of it. I know what your stance on this is, or at least I think I do. Why don't you tell me what your opinion is on that?
It's really interesting, because if you go to the essence of Bitcoin, what happens? So we end up blowing up the world. Everybody gets screwed in 2008-9. And then magically a God appears and delivers his 10 commandments. And people say, this is the one truth. Mm-hmm. And, fucking humans, stop doing this. Just stop doing this. There is not one truth. The world is multi-truths from different sides. So, yes, it kind of came and it seems like that. Nobody should care whether alternative systems, complementary systems, competing systems come into play. It is all the change you need. It is not about worshipping one God. Mm-hmm. It's about worshipping change to create a better system.
Yeah.
So the Libra thing really fascinated me, because there was the big issue with Bitcoin at its current phase. It is not usable as money. Simply not usable. Everyone hoards it. It's too volatile. We try to accept Bitcoin payments at Real Vision. It's just a nightmare.
Right.
So, because your P&L goes up and down, 80%.
Sure.
It's not manageable. Now, maybe when all the coins have been mined and we get to this 100 trillion number that Plan B talks about in his Twitter feed, which I think is genius in how he's valued it, really, really clever. When you get there, so the Bitcoin maximalists have got the fact that Bitcoin is now worth roughly what global money supply is. Okay, we're now in a different world. Mm-hmm. From here to there, that's quite a long way away. So what could happen in the meantime? I thought, and maybe Bitcoin in the end does win because of that. I don't know, and I don't care. What is really interesting was LibraCoin did something interesting. They said, well, the biggest problem is governments don't want us to issue a global currency. So why don't we just issue a global currency based on their currencies? Mm-hmm. Okay. Now, people have done this with stable coins like Tether or whatever. They're all based on the dollar. So they're just dollars. So dollar is part of the problem, not the solution. But what Libra did that was so clever, it created a reserve currency, like a special depository receipt of the IMF, an SDR. because it was all currencies. It was dollars plus yen plus RMB plus euros plus. So what you end up with is a currency that has no denominator. So if you think of any other currency, if we talk about the Aussie dollar we think of in terms of versus the US dollar. If we think of gold, we think of it in terms of the US dollar. If we think of oil, we think of it the price versus the US dollar.
Yeah.
But this giant global coin idea means that the only other side of this equation is global money supply. How much is printed of that? So it becomes much more like a cryptocurrency because you're understanding there's no defined supply and demand. So over time, because it's a fiat currency, it probably devalues, but gently. And the fact, because no one country can affect it overall. So what you've got is the most ingenious solution for everybody to trade a currency, because for everybody, it's stable against global prices. It would even change the global pricing of all assets if this were to take hold. The other clever thing, it came out of the private sector. And governments won't stop it because you still pay your taxes in the underlying currency. So as a step and not the final solution, it is really clever. Is Facebook going to be the one that does it? I doubt it. But I think it's an extraordinary big breakthrough in what the world needs from a currency. And this is what I also think is very important, is the world of cryptocurrencies is now, and digitization has now meant that we can break apart the components of what makes money and have different currencies do different elements. One could be the store of value. One could be the medium of exchange. They don't need to be the same thing. They just need to be fungible. Right. So I think that's an interesting change as well that people haven't got their heads around.
Yeah, it will be interesting to see how all that plays out. I mean, it could go so many different directions. But Raoul, I'm going to hit you with some rapid fire questions now. Okay?
Yeah.
So answer as long as you like. There's about 20 of them. And we'll just get kicked off with, what is money? How do you define money?
Oh, really? That's not exactly an easy question.
I know that one's cheeky.
I've just gone through that.
The rest of them, the rest of them are shorter.
There's the standard definition of what is money, and for me, it's the medium of exchange plus store of wealth. And what most people really think of as money, because I'm a financial markets guy, so I don't need to invest in money. I don't need to hold money. Yeah. I just need it to be able to be used as a medium of exchange instead of barter, because barter's a pain.
Right.
So it's that. So it's the lubricant that allows all commerce and all transactions between humans.
But an ideal
store of wealth.
Yeah, go ahead.
The store of wealth side, I think of separate.
But an ideal money would have both.
You know what? I don't know. That's making an assumption,
yeah,
and creating a hypothesis that maybe is a false assumption. So I'm not sure. It needs to have both.
Okay.
Maybe you can split out components of money separately, and all can be better.
Fair enough. This is the only other kind of longish answer one, but if you had to explain Bitcoin to your grandmother or someone over 80, what would you say?
Okay. Because there's two answers to this. It's kind of like digital gold. And she'll say, why does something digital have money, right? So maybe it's a storage system. It's a nice recorded storage system that anything that you own, nobody can take away from you because it's recorded as an ownership, and you get to pay for that ownership.
Right. Recorded forever, unchangeable.
Correct.
Right.
So that's what Dan Tapio would call the security truth machine,
right?
Which is, maybe things like fake media, fake news, all of this stuff, maybe that all goes away by the time we attach some sort of blockchain element to everything, where everything is recorded from its inception, so we know where everything comes from. So it stops a lot of bad transactions. The problem is governments would love that info.
Sure. I think that's probably along the lines of what's going to happen. How long after you first heard about Bitcoin did you start learning about it and then purchase it?
A month.
Really? Okay. What is your comeback when people dismiss Bitcoin out of hand? We touched on this a little bit already.
Uh, yeah, it doesn't matter to me.
Right. Can Bitcoin be stopped? If so, what is Bitcoin's biggest vulnerability? If not, why not?
Um, of course, it can be stopped. What is the probability is the better question, and it's very low now.
Right.
Um,
How could it
and
be
so
stopped?
again, I don't know. The forks almost killed it at one point. I thought.
Hmm.
I thought, you have to be very careful with how the environment is treated. But now the adoption rate is getting higher and higher and higher. The ant colony that owns and participates in the Bitcoin ecosystem is now more inherently robust than it was.
Hmm.
So the kind of Bitcoin Foundation and the kind of soothsayers that had all of the say, I think that whole thing starts to melt away, and hopefully the mining isn't as concentrated. Concentrated mining is obviously still a problem.
Right. Excuse me. What is your most recent aha moment or level up in your understanding of Bitcoin?
Having a sit down with Dan Tapiero, this macro guy, on my interview with Real Vision, he'd been pestering me, right? I'm looking at the macro world saying the world's blowing up, there's tons of money to be made, investing in this kind of stuff, blah, blah, blah. And Dan is tapping me on the shoulder, sending me emails saying, we need to talk about Bitcoin. I'm like, no, like, I've been in, I'm out, I'm not interested right now, there's too much going on. He's like, no, you have to talk about Bitcoin. I need to talk to you about Bitcoin. I need to, all right, shut up. So we get together and we do it on camera,
Yeah.
and he gives me this whole thing. And it was one of those moments like, you know what, obviously I believe in all of this stuff. It's time to get back in.
Yeah. What do you think will be Bitcoin's biggest impact on society?
I'm moving towards truth.
Transparency, truth, ironclad record
Just,
keeping.
yeah, it's the ironclad record keeping. I think in the end has so many benefits for humanity. There are some downsides too, but it has so many benefits because the digital world right now, when you look at deep fakes, the photographs,
Yeah.
you don't know what is real any longer, right? So we have a real problem with authenticity. And this is the great authenticator. And that is something that is going to be incredibly valuable when our virtual and our real worlds merge, which they're doing very fast right now.
Couldn't agree more. When, if ever, do you think the first central bank will start adding Bitcoin to the reserves?
Well, I think there'll be a few small periphery central banks, but they can't. It's too small still. So even if they want to, even if you've got a frothing at the mouth, forward-looking central bank leader, but there's nothing they can do. It's just simply not big enough.
5 years from now?
Sorry?
5 years from now? 10 years from now?
It needs to be worth $1 trillion at least before you can put central bank money into it.
So next
that's
year.
not. Sorry?
So next year, right?
Yeah, but even then, it's still difficult because the volatility of those assets versus others. So
Sure.
you need a volatility that looks like a currency. So call it a 6 vol
Yep.
instrument that needs to be worth $10 trillion or $5 trillion. Okay, it's not there yet. I think the volatility won't stop until you get closer to maximum coin mining.
Can you put a year number on that, or
Well, when is the last coin supposed to be mined?
2140-ish, I believe.
Yeah, so my guess is by the 2030s, you've got a low volatility, massively deep, complex world of which central banks will, of course, own it. But I don't even know that the current system of central banking will exist at that point.
That was the follow-up. Will there be central banks in 20 years? What is the biggest mistake you've made with Bitcoin?
Assuming I understood it.
Excellent
I mean, buying and
answer.
selling decisions are fine. I make 10x the first time I did it. I then missed the run up, and I missed the low here, but got pretty close. It's not that. That's the world we live in.
Yeah.
It's thinking I knew what it was. Once you understand that you don't know what it is, and stop trying to think that you do, is when you understand the possibilities and probabilities.
Yeah, that resonates with me a lot. Bitcoin humbles you in many ways, I find, and that is certainly one of them. How do you feel about Satoshi Nakamoto, Bitcoin's creator, being anonymous, and the coins that they likely control?
My view on this is and has been since the beginning. If I look at the language of the paper, it's either purposely obfuscated or it's actually written by an American and an Englishman. To me, it has the hallmarks of the world's two centers of cryptography, the NSA and GCHQ in the UK.
Really?
I think, yes, and I think that's why the money's not been spent. It's never been touched. It's because I think my guess is, having known a lot of the people, not a lot of the people, several people in places like the Department of Defense, in the Pentagon, other places, they're fully aware of the fragility of the financial system, and their view was this is one of the Achilles heels of the kind of Western democracy, and one of the Achilles heels of China, for example. So they understand that warfare can be based around economics and finance. They also understood that, and many of us had spoken to them in 2008-7 about what was coming and what it was, and they knew that they had no real answer for this, and it was a national or international security issue. So, considering that they probably had access to most of the talent in the world from this, it would not be a surprise if, like a open source code, they developed it and let it see what happens.
Very interesting.
And it adopted. Now, maybe there was 50 open source codes planted in different things, but they didn't get adopted because they keep trialing this stuff. And this one was the one that worked. And it would make sense why there's never been a single comment. Look, it's ridiculous to imagine there's some guy stroking his white cat in his Swiss lair with $10 billion worth of Bitcoin. It's ludicrous. Somebody else said, oh, well, whoever thought of it was so clever, but they've kept it as their cash reserves for the future when Bitcoin, because it's too deflationary to balance out the deflation to manage the money supply. I'm like, no, you're not gonna hold that back, because at $10 billion, you might have bought yourself a cup of tea or something with it. You might have spent something. So I don't, I think it's actually come, sadly enough for everybody, from the epicenter of the system and not from the fringes.
Right. So not a believer in the benevolent creator God narrative, but
strangely enough,
else.
No.
And do you think that it was created that way to ultimately be used in some sort of malicious way, or just as an alternative to existing problems?
I think because if my view is correct, then I have to believe that it was built for the purpose of how the hell do you transition a financial system? Is there ways of doing it? So as a thought experiment that started to work.
Wow.
Now, is there any evidence I've got of this? None whatsoever.
Right. Just a gut feeling and some conversations.
But it makes sense to me in my own small brain, is the fact that it's written in this weird language. The two centers of cryptography are there. The people who understood the most that the financial system needed it was that. So that is my general view.
Fair enough. Raoul, you got 5 more minutes? We just got a few more here.
Sure.
What have you learned about yourself, or how have you changed, if at all, as a result of learning about and interacting with Bitcoin?
I have become more broad-minded the more I know about stuff, because the less I know about it.
Right.
We even started Real Vision with in fact, I've got the poster on my wall, which is, I was a finance guy, and I was starting a media business. What did I know? And when people said to us, I remember we were at a meeting with these developers who were developing our platform, and like, well, so what do you guys know about the media business? And I just looked at them and said, we know fuck about fuck. And so that became the ethos of the firm, because when you know and accept you don't know, then you can do truly disruptive things.
Right.
And so Bitcoin has been one of those things that has forced me to completely understand how little I know. And therefore the world is all probabilistic outcomes and no certainties. So I can pontificate about everything, but I cannot have certainties apart from the fact that, there are no certainties. So I think that's what it's taught me, and it does, as you said, it humbles you, because once you go down the philosophical rabbit hole, and I love the philosophy of understanding future outcomes. It's truly extraordinary.
I agree. At what price would you permanently sell, let's say 75% of your Bitcoin? basically the question is trying to get at, how tightly are you holding on to this stuff?
I don't think of it. So I think of it in two ways. Uh, you've got this tremendous issue with the community that everybody wants to hold on to it forever.
Mm-hmm.
So it changes what it does. So it tends to be 80% losses, 1,000% up, all of that stuff. I think you can trade it on and off, buy and sell it, because what the Bitcoin community doesn't yet understand is it's an asset. And assets are to be bartered for other goods and services. So for me, it's okay, if my Bitcoin is up enough that I can buy a house, does the house give me more utility to my life than the Bitcoin? Maybe. Sometimes not. Maybe I'll just hold on to Bitcoin because I don't need a house. Mm-hmm. Or I think, listen, the Bitcoin is going to go up more and I can afford a bigger house. But at some points, all assets are relative in valuation. So Bitcoin is the same and will be the same. We just don't know where its bands are yet.
Right.
But if you look at the price of gold versus wheat, or oil versus gold, or equities versus gold, everything, real estate versus equities, they all trade in massive bands because they have a relative valuation, because at some point, a rational human being will exchange it for something else.
Right. Have you ever?
Which is why Satoshi Nakamoto, to have not exchanged anything for anything else, with it being worth $10 billion, doesn't make a lot of sense.
It would definitely be a very unique individual. Let's say that.
Yeah.
Have you ever purchased other?
Sounds non-human, right?
What's that?
It's non-human. It's a non-human behavioral pattern.
Right. Or possibly a time traveler, if you've read the Bitcoin lore. Have you ever purchased other coins? If so, are you likely to do so again in the future?
I haven't, but yes.
What is your most controversial or contrarian view or opinion? If none on Bitcoin, any subject is fine.
I think I'm reasonably controversial and contrarian as it is. I think it probably oozes from my pores. So.
Well, I don't know. I think the contrarian is starting to become mainstream with the environment that we're in. Nothing in particular comes to mind related to Bitcoin?
Contrarian related to Bitcoin? No.
Okay.
Because it's difficult to know what the one truth is within Bitcoin. My most contrarian opinion is one of the best stock markets to invest over the next 20 years is Iran. There you go. That's contrarian.
Okay, good. Ballpark estimate of Bitcoin's price in 5 years?
I just use that Plan B stock flow model. You just kind of put the thing in 5 years' time. I don't know where it's supposed to be, but on his model, it's probably about $1 million.
Okay. Do you believe there are reliable ways at spotting a paradigm shift? If so, what are they?
No. I think it's a big. I think many of us are prone to assigning that term to things that aren't paradigm shifts because we want them to be so. So I think it's actually very hard to know. Now, can you analyze it by data and say this is a paradigm shift via adoption? Probably. The adoption curve is probably the only way you can do it, truthfully.
Okay.
The rest is us wishing it.
Do you have a morning routine? If so, what is it?
It's very simple for me. So I'm an early riser. So I'm usually up. Like this morning, I was up at 5. I'm up at 5. First thing I do is grind some coffee beans, make some fresh coffee in a French press, turn on my Bloomberg, turn on my Twitter and my email, and before, it's kind of like which order. I never want to get into emails because they always require that you have to write something, or generally there'll be something that is not good that you'll have to deal with.
Right.
So I tend to go to the Twitterverse and just check the world. Because what an extraordinary behavioral shift is. Look, I was a FT economist reader, blah blah blah. I don't do any of that. Yeah. Twitter is my life.
It's your own news. You get to curate your own news channel, basically.
It is the most extraordinary thing. If there's something else that should be worth an extraordinary amount of money, it's Twitter, because it is completely changed the game for everybody. It's 1 degree of separation. You and I would never have met each other.
Yeah.
But now we get to, within one message, get to meet each other and then have a chat. That's
incredible.
Extraordinary.
Yeah. How do you define success?
Wrapped up in quality of life. So it's quality of life. Now, quality of life may be, look, we're all humans, we're all fallible, maybe some internal measure of the relative worth of yourself versus others in the way that you perceive it.
Mm-hmm.
For me, it's, it's like I answered the Bitcoin question is, what do you get from all of this? Success for me is you've got one life. You have to live it in the best possible way you can. And it's not about money. It's not about success, but it is about the appreciation of the phenomenal world that we live in.
Where or who is your go-to place to learn more about Bitcoin specifically?
Twitter. No, that's a lie. Actually, there's some people as well that I use. So people like Emil Woods and Chad Cascarello.
Mm-hmm.
So Emil and Chad were the guys who got me into Bitcoin in the first place. So they started the exchange itBit.
Mm-hmm.
They've got VC firms. These guys were in it when it was, I don't know, 50 cents or less. They started a hedge fund.
Yeah.
They're ex-Goldman guys like me. They started a hedge fund. They've realized that they were given by their landlord free electricity. Somebody introduced them to Bitcoin. So they thought, well, fuck it, we'll stop mining it. So let's have a play with this. So they mined a ton of Bitcoin, then bought some more, and then sat on it. And literally
did very
made
well.
Yes, and then they've gone and they've been great people in the Bitcoin community. So often those are the real head check guys I go to.
Yeah.
But then I know a lot of people like Jim Palotta at Raptor, and a whole bunch of the Bitcoin community people that I'm just blessed enough to, Novo, people like that I'm blessed enough to know. So I can go to speak to this kind of great and good of the industry. I don't know many of the developer side. I know a lot of the finance side, obviously, because that's my background.
Yeah. Second last one. First time I've tried this question on, but in the current environment that we're in today, what is the one or most important action myself or somebody listening can take to up our game in your area of expertise? If to just want to improve, what's the best way you know how to do that at this time?
Yeah. The difference between a rookie and somebody who has a broader understanding is understanding knock-on effects. The news is not what is happening. The news is essentially what happened.
Right.
What you need to be doing is understanding how the news leads to an event, leads to another event. So you don't react to trade tariffs. You react to what does this mean for the currency markets and how does this mean to this? Now, people are starting to do this, learning it in things like Bitcoin, because it is all about the future knock-on effects. But it's what turns people into a better investor and is understanding the future probabilities of events and how they get shifted by current events. Which is why when I show you those charts on Twitter, what I'm talking about, I'm trying to get across is, look, these 20 charts are increasing because they all match. They're increasing the probability of a big event coming, and that big event coming could lead to this, which could lead to that. Mm-hmm. So stay aware, and you know that things like Bitcoin and gold are moving because of it. But that's the clever thing about markets. It just kind of happens. They start moving ahead of events. I mean, it's clever,
right?
Because people start pricing in that small probability, and the more people price in the small probability, the higher probability it is.
Last one, and this is a word association. Okay, so I say a word, you just blurt out whatever comes to your mind.
Christ,
you game?
Yeah.
Okay, Satoshi Nakamoto.
Japan.
Government.
Fraud.
Hash rate.
Hashtag.
The individual.
The collective.
Security.
Home.
Stacking sats.
What the fuck?
Have you not heard about stacking sats? Oh my God! I can't believe I'm breaking this to you for the first time. So this is a meme that's been incredibly popular in the Bitcoin maximalist, let's say, community over the last, I think it's been around maybe for 6 months, 4 months, something like that. I could be wrong on the timeline, but basically, satoshis are the 100 million satoshis to each Bitcoin, and so stacking sats has become like a rallying cry to the community where, don't worry about the ups and the downs. Also, don't worry about accumulating full Bitcoins because they've become so expensive. just make sure that you're stacking sats, which means, and basically it's an invitation to everybody, people who aren't involved, that you didn't miss the boat. You can still accumulate, on a very small
So,
scale.
okay, my
That
answer
sort of
to
thing.
that is propaganda.
Fair enough. Next one, fiat currency,
Propaganda.
altcoins,
Interesting.
pizza,
Carbohydrates.
Libra.
I'm a keto diet, guys.
Fair enough. Libra,
Fascinating.
gold,
Your own personal reserve currency.
Real Vision,
Hard work.
Bitcoin.
The future.
Well, that's all I got for you, man. I can't thank you enough for taking the time. That was awesome. I really enjoyed that. I'm sure lots of others will as well. I'm sure there's a couple places you want to direct some people. Real
Yeah. So
Vision.
if you want to, yeah, dig me out on Twitter. I'm very active. I'm often as I can, if I can, reply to people and get involved. Unfortunately, my Twitter following is getting a bit big for that now, but I'm trying my best.
Yeah.
So at Raoul, Raoul GMI. So GMI is Global Macro Investor, which is my research business. So at Raoul GMI. So find me on Twitter. But look, if you're interested in anything to do with markets and hearing from the greatest people in the Bitcoin crypto community, we've got content going back so far. Everything from the hash graph guys to people starting exchanges through to, the Dan Moreheads of this world. Everybody's been on it. It's really interesting. So it's realvision.com.
Mm-hmm.
And we got a free version out as well called Real Vision Free. So just realvision.com/free. Then you don't even have to pay for it. If not, it's $180 a year. It's the Netflix of finance. It's absolutely incredible. You've heard us talk about it a lot in this interview. I'm immensely proud. So I said, in the answer to your question, you said Real Vision hard work. It is, but the other thing I am is incredibly proud of what we've managed to do. We've basically completely disrupted the media industry. So
Yeah, and in my opinion, you should be made. It's also on YouTube. If anybody's wondering, there's also a lot of them up there. Different playlists for different themes and topics. Obviously, a lot of crypto and Bitcoin stuff. But if you're a geek about macro view of how the world works, it's definitely it's definitely a great destination. I watched recently, a couple days ago, the Kyle Bass interviews where he was talking about what's going on in Hong Kong, and he's been critical of that situation for a long time, and it's really interesting the people you access, and then the discussions themselves are phenomenal.
Yeah, I mean, we're super lucky. We have unparalleled access to just literally the most famous people in the financial world and the smartest thinkers. But what I think for your listeners is interesting is the macro and Bitcoin worlds are colliding because they are part of the same thing. Mm-hmm. So I think it's in everybody's interest to know as much about each other as possible because we're actually all part of the same team.
Sure.
So that's what Real Vision will do for you. It'll help anybody, whether you're a macro guy and you want to know more about Bitcoin, or you're a Bitcoin guy, you want to know more about your own space, or you want to know more about how you fit into the bigger space. It's all there for you.
Yeah. And what are kind of plans on the future for Real Vision, if you don't mind my asking?
Well, we are going to increase content in this area. We're just doing some research internally now about how do we become one of the true voices in the space by bringing kind of our skill set into it. Because I do think it's important, and I think it's a very large market and it's massively underserved. There's some great podcasts like the one you're doing, but in television world, there's nothing. Yeah. So it's a few YouTube influencers. Beyond that, there's nothing really there. So we're looking into that. And Real Vision, we're moving into a lot of live events as well. So they're always a lot of fun.
Yeah.
And if not, we just keep building out our fantastic. I mean, we've got 1,500 hours of video now. So it's an extraordinary thing.
And how big is the team? Just out of curiosity.
About 80 people.
Wow.
So we got about 50 in New York, 50 or 60 in New York with production studios and the world's coolest studio set, which is, if you'd imagine Keith Richards' city apartment, that's what it looks like. It's really cool. Because again, we just finance doesn't have to be boring.
Sure.
Finance can be a little bit rock and roll, a little bit interesting, a little bit more rebellious, because you know what? Most of us, that's what we are.
Yeah.
And
especially
we're not
now.
the accountants.
Yeah, especially
Exactly.
now in the climate and the way things are changing. I think you're allowed to express that maybe side of you got that was always present but had to be a little bit more buttoned up. Like, it's nice to see that it's loosening the tie a little bit and, having a bit more fun with it.
Exactly right.
Yeah. Well, Raoul, I've chewed up enough of your morning. I very much appreciate the time, and I do hope one day we'll get to do a face-to-face sit down in person and continue any one of these many discussions that we just touched on today. So I wish you
I'd
all the
love to.
best, and take care.
Brilliant. Thank you ever so much. Really enjoyed it.
Cheers, mate.